As of Sunday, May 3rd, 2026, the stock market is currently closed for the weekend. The most recent trading session for IREN Limited concluded on Friday, May 1st, 2026, with the stock finishing at a closing price of 45.66. This represented a modest intraday gain of 0.33% from the previous close, though the session was far more volatile than that small green number suggests. During the day, the price swung from a low of 45.15 all the way up to a peak of 47.40, showing that the battle between bulls and bears is heating up as we approach a massive week for the company. Most people looking at IRN right now see a Bitcoin miner that had a great run and is now just following the oscillations of the crypto market. That is the common expectation. But the reality is that the floor beneath this company has shifted in a way the market is only just beginning to price in. While the crowd is obsessing over hash rates and the next Bitcoin halving cycle, the real story for IRN is becoming its physical infrastructure and a high-stakes pivot into the world of artificial intelligence. The curiosity loop here isn't about how many coins they mined last month. It's about the fact that they recently secured a massive multi-year deal with Microsoft to provide a significant portion of their GPU capacity for AI cloud services. We are talking about a contract for 77,000 of their 150,000 GPUs, a move that is projected to generate roughly $1.94 billion in annualized revenue. Think about that for a second. This isn't a maybe or a someday plan. This is a signed agreement with one of the largest tech companies on the planet. Most retail investors are still treating this like a volatile crypto play, but the institutional activity we're seeing suggests they are starting to view it as a backbone provider for the AI infrastructure supercycle. When you look at IRN through that lens, the current price starts to look less like a speculative bet and more like a valuation arbitrage play. There is a massive tension right now between the market's narrative and the actual operational development. The narrative says IRN is a mining company that missed its last revenue estimates by about 18%, coming in at $184.7 million. The reality, however, is that this miss was largely a timing issue related to equipment deliveries and deployment phases. Beneath that surface-level disappointment, IRN actually beat adjusted earnings per share estimates significantly and managed to stay cash flow positive in areas where its peers are bleeding out. They are currently building a 1.6 gigawatt data center campus in Oklahoma, which is a scale of operation that few people truly comprehend. To put that in perspective, that is enough power to fuel a medium-sized city, and it's all being directed toward the highest demand computing on Earth. Comment below how many shares of IRN stock you currently hold, or if you are waiting for the next earnings report to make a move. I'm curious to see if this community is leaning more toward the mining side of the business or the AI cloud pivot. When you track the daily swings and trading volumes, you see a stock that is being tugged in two different directions. On one hand, you have the high beta volatility that comes with the crypto sector. If Bitcoin takes a breather, IRN often feels the weight. On the other hand, the institutional activity is showing a steady accumulation. Firms like Airax Advisory Partners and CIBC Private Wealth have been boosting their positions by triple-digit percentages recently. These aren't day traders. These are sophisticated players who see the $6 billion at-the-market financing program not as a dilution thread, but as a war chest for massive expansion. If you are using a platform like Interactive Brokers or checking your individual brokerage through the Fidelity mobile app, you've probably noticed the volatility has been intense, with IRN's beta sitting around 4.30. That means it moves 4 times as much as the broader market. It's not for the faint of heart, but that volatility is exactly where the opportunity lies for those who understand the underlying business model. Speaking of the business model, it is worth looking at how IRN actually operates. Unlike some competitors that rent space or rely on third-party hosting, IRN focuses on owning its infrastructure and using 100% renewable energy. They build their own data centers from the ground up. This gives them a massive advantage in the AI space because they control the power and the cooling, which are the two biggest bottlenecks in high-performance computing. Historically, this was just about mining Bitcoin. They would buy miners, plug them in, and reap the rewards of the blockchain. But the newer strategy is a full-scale transition into GPU leasing and AI cloud contracts. By the end of 2026, the company anticipates reaching $3.4 billion in annual recurring revenue. If they hit that, the current market cap of around $15 billion is going to look very different in hindsight. For those who are self-investing or looking for investment help on investment sites, it's important to distinguish between the noise of a quarterly miss and the signal of long-term contract wins. Most of the recent selling pressure came from concerns over that $6 billion ATM program. Investors hate the word dilution, and rightly so. But in a capital-intensive industry like this, the question is what they are doing with that capital. If they are using it to buy tens of thousands of H100 or Blackwell GPUs and plugging them into a Microsoft-backed contract, that dilution is effectively buying future cash flow that is much more stable than Bitcoin mining ever was. This is the same logic you see with Nvidia stock or Apple stock. Growth requires massive capex, and as long as the return on that invested capital exceeds the cost, the shareholders win in the long run. If you're watching this through your Robinhood app or managing your SoFi Invest account, you need to be aware of the upcoming catalyst. IREN is scheduled to report its next set of earnings on May 7, 2026, after the market closes. Analysts are looking for a negative EPS of about 24 cents, but as we saw last time, the headline earnings number often tells a different story than the operational updates. What I'll be looking for is the progress on the Oklahoma campus and any further updates on the GPU deployment schedule. If they show they are ahead of schedule on the Microsoft deal, we could see a massive re-rating of the stock. Currently, the analyst community is split, but the consensus remains a moderate buy, with price targets reaching as high as $70, which represents a significant upside from this $45 range. The broader macroeconomic pressure is also a factor. We're in an environment where interest rates are a major headwind for companies with high debt-to-equity ratios. IRN's ratio is around 1.51, which is manageable but something to watch. If the Fed stays hawkish, the cost of financing that massive 1.6 gigawatt expansion could go up. This is why having $2.8 billion in cash and equivalents, as reported earlier this year, is such a critical safety net. It allows them to keep building while others are forced to wait for better rates. Whether you use Schwab Intelligent Portfolios or prefer active trading on the Interactive Brokers platform, the liquidity of a company is the first thing you should check before entering a high-growth play like this. Looking at the future outlook, we have two distinct scenarios. In the bull case, IRN successfully navigates the pivot, becomes a premier provider for AI cloud services, and keeps the mining business as a secondary cash cow that benefits from any Bitcoin price appreciation. In this scenario, they transition from a speculative mining stock to a specialized data center REIT-style valuation, which usually carries much higher multiples. The bear case is that the transition takes longer than expected, the CapEx spend burns through their cash faster than the AI revenue comes in, and they are forced to keep tapping the ATM program at lower and lower prices, frustrating long-term holders. The tension here is palpable. People expect a mining company. They are getting an AI infrastructure play. People expect a revenue miss to tank the stock. They get institutional accumulation instead. This contrast is exactly why the stock has such a wide 52-week range, from 5.72 to 76.87. We're currently sitting right in the middle of that range, which often indicates a period of consolidation before a major move. Whether you are holding this in a Fidelity IRA or just trading the daily swings on Robinhood, you have to decide which side of the expectation versus reality divide you land on. To summarize, IRN is currently at a massive crossroads. The live market is closed for the weekend, with the price standing at 45.66, but the anticipation for the May 7th earnings report is building. The expectation is a company struggling with the transition and diluting shareholders. The reality appears to be a company aggressively positioning itself as a key partner for Microsoft and a dominant force in the next generation of data centers. They have the power, they have the contracts, and they have the institutional backing. The volatility is real, and the risks of a capital-intensive pivot are high, but the potential for IRN to fundamentally change its identity and its valuation has never been clearer. Keep a close eye on the volume and the after-hours movement this coming Thursday. This is a story of a company that is refusing to be put in a box, and for the patient investor, that kind of identity shift is often where the biggest gains are hidden. Make sure you're using all the tools available to you, whether that's the Robinhood crypto features for the mining side or the deep research available through Fidelity Brokerage for the institutional side. This isn't just about one stock, it's about the entire convergence of energy, compute, and finance. Those who see the reality of the infrastructure build-out while others only see the narrative of the mining fluctuations are the ones who will likely come out ahead. It's a professional game of chess played with billions of dollars in hardware, and IRN just moved its queen into a very aggressive position on the board. We will see if the rest of the market realizes it before the next earnings call. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.